Top of the morning, back at it again with another one. And today, we're looking at the Nasdaq. If you don't know now, you know. Be sure to give us a follow on Twitter. The handle is SCHMDII, SCHMDII, and we'll be posting everything about charts, off the charts, and everything in between. So be sure to check us out. First one for the week, nice price action, very nice price action. Got some bullish movement today, and yeah, man, it's pretty clean, very clean. We opened up, meandered around a bit, took out some lows, shot up, took out a short-term high, came down into M15 fair value gap, hit it once, hit it again, hit there, and then we made our way over to the upside. Very beautiful movement. As well as here, something of note, I'm just going to go to the 4-hourly time frame quickly, if it works with me, because, network here by my side has been quite rubbish. Quite rubbish, I must say. So, what was this thing now? Was it here? User. Just gonna mark that out at 4-hourly order block. And then we'll go back into the M15. Put it there, bro. Whoops, wrong one. Put it over there. Okay, order block marked out. Let's go back to the M15. I've noticed something very, very nice where if I have, say, a fair value gap on the M15 that lines up with the 4-hourly order block, those trades tend to give me more juice, way more juice, very much more juice. You'll see that's that 4-hourly order block. Look how prices, like, especially here for that afternoon trade around about 3:30ish, how the bodies didn't even close past it and we shot up very, very nicely. Very, very nicely. There's this order that I want to just speak on that I feel like if we look out for it, I mean myself, this is a note to self. If you find value in these notes to self that I leave myself, then I'm glad. Stick around. I'm about to give more and more and more sauce. Pay attention to 10 o'clock, right? Ideally, what we want to see is a liquidity run after 10 o'clock. Yeah, we got that. You know what I'm saying? The first one was at 10, 10:30, right? The 10:30 one was much more convincing. But like, liquidity sweeps after 10 a.m. are significant. Breaks of structure or changes in the state of delivery after 10 a.m. are significant. PDRAs that form after 10 a.m. are significant. I just want to put it out there to myself to pay attention to that. You can see here we ran this short-term low, or the sell side liquidity. We ran that, shot up to the upside, broke a short-term high, retraced back into the area where we had the M15 fair value gap. That was coupled with the 4-hourly order block as well. That's that thick black line. That's a 4-hourly order block. And then you shot up to the upside. Another layer is when I put this on. I'm going to put the fib against the bodies. Normally it's the high to low. I'm not doing that in this instance. I'm just using the candle bodies, right? Candle bodies, put on my fib. No, not my premium versus that. Projection fib. You see that the 4-hourly order block and the fair value gap also line up with OTE. which if you note how the candle bodies didn't close outside of that OTE zone, it's probably random, right? You see that? Just give you a second to take a look. Notice how we had the liquidity sweep after 10. Let me use this other cursor. We had the liquidity sweep after 10, shot up, broke the short-term high, reversed or retraced back into the range. Fair value gap on the M15, or 4 hourly order block. OTE hit that, started to go off. Rest is history. Rest is history. If we measuring from, say, the high of the fair value gap to the high over there, we had a movement of about 124 points. Not bad if you ask me. Not bad if you ask me. I just want to highlight like that after 10 a.m. Having that sweep occur after 10 a.m. Very important. Pay attention to that. After 10 a.m. we had the sweep of the sell side, shot up, opened up that fair value gap. It was a bit late, admittedly, but opened that up. It was a bit of a late trade yesterday. Usually, of course, I try to enter between 10 a.m. and 11 a.m. But, price offered it to us a little bit later on. The fair value gap nestled in with the M15 fair value gap. That's that gray box nestled into an M15 order block, which also layers up with the 4 hourly order block. That's that thick black line, which also layers up with OTE, the 0.62 and 0.79 area. Add all those confluences together, you have a lead pipe trade. Can't lose. Can't lose. The only next thing to really pay attention to is stop loss placement. So obviously de-risking is nice, but you can see here, if we initially had the entry there, the stop loss would be just below that wick that swept the liquidity initially. That's, in my experience, a good and a solid place to place your stop loss. That leg which sweeps the sell side of the buy side liquidity. In this case, it was the sell side liquidity. If we had the stop there, it would be in a very safe area. It would be at the low. We'd have that order block over there, and as well as that fair value gap over there to defend our stop. If, let's say, we initially it came back down and I entered and it began to trade up, and I moved my stop to, say, break even or just below this order block here, or below the close or open price of this candle, so thereby the 0.5, I would have been stopped out the second time when price came back, and that's what happened to one of my partials. It got stopped out. Whereas if I just left it in that safe area, we would have been gone, but you live and you learn. It's just one of those ones. I'm gonna place a projection fib at the low of this, and I'll place it at the can I say here? Let me say there. I'm gonna remove that. I'm just getting projections to see, like from that low to that manipulation leg that took out the sell side liquidity. I'm putting my fib on that manipulation leg, and would you look at that? Price gets up to that -2 and -2.5 area. That's a good place to take profits. Good place to take profits, because obviously ultimately you're looking for price to get up to the -4 standard deviation area, but in this instance, very good place to take profit, and that's what happened. Straightforward, really, nothing really fancy. We could perhaps come back to this tomorrow or something. I don't know. We'll see what happens. But it's beautiful, man. Nice price move, nice price action. Straightforward. The order of delivery. After 10 a.m., anticipate a liquidity sweep, followed by a break of a short-term structure, short-term high in this instance, retracement back into a fair value gap, and then you'll put your projection fib on the manipulation leg that took out the liquidity, the sell side or the buy side, before the fair value gap opened up for our entry. Key takeaways, like I said, I'm just going to keep hammering this on because I really need to pay attention to this. Note to self: pay attention to liquidity sweeps and PDRAs that form after 10 a.m. Pay very close attention to those. I'll repeat it again because I don't think I really appreciate like just how valuable that little like bit of information is. Whenever I re-listen to this video, rewatch it, pay attention to liquidity sweeps that occur after 10 a.m. Pay attention to PDRAs that form after 10 a.m. Pay attention to fair value gaps on the M15 that line up with order blocks on the 4-hourly time frame. And pay attention to when price hits the previous day's highs or previous day's lows. Thank God for the skill. I'll be back with more. Another day, another dollar.